Hello and welcome to Macro Mondays here on Landy's Crypto Corner, powered by the Goxstein News Network. Today is July 7th, 2025. We're looking at Bitcoin here on the daily to start. We will look at the weekly. We're going to lay out kind of where things are and where they might head next. Today, we can see on the daily that we have a clear invalidation of an uptrend if this last higher low is taken out. Very, very, very simple. That's going to be right there at 107,260 or so. And this is on spot price. So if we do see that low get closed below, then, well, we would have a higher low into a lower high. And that is something to watch out for. Pretty clear setup. That would be a trend break. But this is a trend break that is right in the middle of a major support and resistance zone of interest. So I wouldn't really be ringing the alarm bells until I saw Bitcoin start to close below 105, 120. But something to watch out for at minimum here for Bitcoin to the downside is a trend breaking close below that 107, we'll call it 250, 260 area. If we do see that, it's got some room to move locally here, but it would start to look as though Bitcoin would start to want to come down to the edge of the support area that it's currently in. And if it does lose it, obviously, then we have to look right at this low here at that 105, 120. Pretty easy criteria to be looking for to the upside for continuation back to the highs, potentially higher to the all-time high there, and maybe even getting another leg underway. And that is, well, any closes right back above the highs here. You could take the swing highs here from the Sunday into Monday session as well if you'd like, and that's going to be right there at 109,736. So essentially Bitcoin is right there in the 108 to 110 resistance, and then we have the 110 to 112. Pretty strong overhead resistance right now at that 108 to 110. We do need to see closes above there, of course, and then we're to 110 to 112, potential to break out, potentially go on a daily run to the upside. Now, it's not threatening to do that at the moment here, but let's relate that to where our bands of interest are here for volatility. We have the upper first standard deviation right here at just around 109. Now, you can call it this high over here. It's basically right in line with the upper first. That would start to paint the picture if we start to see closes back above there that, Bitcoin can play within the volatility levels of interest between that 109 and essentially 111. But again, I would take it as like a 108 to 110, 110 to 112. Anywhere above there, obviously, we'd be getting expansion. Anywhere above the upper second standard deviation is what we want to see on closes. But we have to see two criteria met for expansion to the upside. Close above the upper second. Doesn't get us above the all-time high, but it would kick us off into daily expansion into the all-time high area. Closes above it would start that expansion. We would need to see close over close price momentum above here as well. And then we can start entertaining 112 to, I would still say upper third, more likely to head towards that 115 area for the daily. And currently it is at, it's at around 113.5 or so. And if this candle were to turn green, we get another successive green candle. We'll see that upper third right around 115. So if we don't see that occur by Wednesday, we'll obviously have updated volatility targets to the upside. You can see just below the trend breaking higher low if Bitcoin starts to close below here, because we do have an uptrend now. We have a higher high, we have a higher low. This is not a lower high just yet. We would get that on any closes below that 107, 250 to 260 area. But then we have the basis right there and the low 107 region. The mid 106, 106, 650 in this case. Anywhere below there. Volatility level of interest encompasses this last higher low here at the 105, 120 down to the 104 to 104 area. 104.4 area rather by the lower first. And now if I get rid of this and kind of poke around at a few more things here, we can see that we're basically neutral but above the 50 read on RSI. There's not too much going on here. We did see a slight miss of a bearish divergence. Now we have a higher high and then a subsequent higher high, but we did not get any bearish divergence on it. So there's not much actionable there. And that is because this is a new trend. That is the most, there might be some bearish divergence populating from over here. But in this case, we've had a daily downtrend. It's been broken. Now we have a daily uptrend. So the trend is more powerful than just a latent signal like that. So I would just pay attention to the trend and any divergences that occur within this new trend, or if it just breaks down, it does look as though it would want to kind of consolidate a bit more. And in fact, for RSI, we can see that the bearish control zone is at 101.5. So again, that's a really key area to the downside. We'll look at the support and resistance zones of interest in a moment. Bullish control zone, you can see, is going to be at the 111.2 to 300 area, right at the edge of the bullish control zone. So again, right around the highs here, start taking that out, work its way into the bullish control zone. We're likely going to be running the highs and potentially higher for Bitcoin. Breakdown, well, that's when we start looking at the actual low side structure down here, right around the 101 area. If we look at momentum, we do see a momentum shift, and the way to kind of gauge whether that's going to go back up, it's going to be back above 110. So basically right above the resistance that Bitcoin needs to beat now. And again, that's essentially back above the highs from the Sunday and Monday session here. So that would start to paint the picture that potentially we could have momentum start to shift within the context of, in this case, the bullish control zone. And that is a regular Stokes, so you can use bullish and bearish control zones. You can use divergences. It's not a Stoke RSI. Stoke RSI measures the velocity of RSI. A regular Stoke measures the close over close price momentum. So we're looking at two different things there. We don't need an indicator of an indicator, seeing as we just looked at RSI. Let's go ahead and take a look at the support and resistance zones of interest. Just kind of see where our volatility levels of confluence are. And, not too much has changed here. Got 106 to 109.360 here. We did get our move to that 110 region and then a rejection. Need to see a close in there for the 110 to 112 to be a viable target, and the all-time highs to really start to look like they're going to get broken. Anywhere below the basis, we're still within the area of interest down to the 106. And again, this is the double top on a close open over here from the first set of highs that came in. That created the really nice all-time highs before the big dump off to 74, 420, 69. Anywhere below the 106 region, we're looking right down to the 104 region here, right by a major fib extension level at the 1272. And anywhere below there, we're in the big zone of interest here, the big yellow zone between 104 and 101. On closes, that's fine. We did see we got a little bit of a close outside of it. We closed back inside the swings here. Anywhere below about 100,700, we're running that 98 to top side of the candles down here at 95, encompassing that that $96,000 area where we had the point of control, or where we have the point of control in this case. It is kind of the most volume for the traded price was at right around $96,000. So that is our POC. Anywhere below there, we've got the prior weekly higher low, and we're going to look at the weekly in just a moment at 93.5. That's where the move originated after the range low recovery over here. So very, very important area right around 93 to 93.5 before hitting the original bottom side of the range over here, which would be the 92 to 88.7, which is also coming in on a major fib for myself. You won't see that one actually on too many others, but the daily worked out perfectly for that particular one. On the way up, so this is a macro fib extension, or 16.8%, or the 1.168 at 88.7. We saw the close open post expansion out of the prior range down here occur right at that 88.7. First bearish candle comes in there. We saw that after it did put in a high and put it in on a close, bounced right off of there for a nice higher low, and then move up, use the top side there at a $92,000 level, which helped define the bottom of the range over here. Once we saw it closed in, Well, everything broke down. Found this area as resistance. We broke it, sat on the weekly, and then pushed to new all-time highs. So, essentially, what I would say is Bitcoin above 106 looks good. Sideways and up is more likely. Even if this does shift trend around here on the highs, below there, just be aware that we're in a wider range. Bulls need to see closes above that 101. Starts to dip anywhere below there, even if it's on a swing, it's going to be running this low at 98 to 95. And bulls really don't want to see it going too much lower than that. Or the macro picture starts to change a little bit. Let's go ahead and get rid of this. Support and resistance areas of interest, rather. And get that off the board. We'll look at the weekly. We now have our weekly trend reversal setup in play. So this one is really, really, really important. We now have a closing high or low. So we had a closing high as of a couple weeks ago here in mid-June, the mid-June candle. Yes, we have a bit of a swing downtrend, but the closing trend didn't put in the actual or complete the closing high until just about 2 weeks ago or 2 weeks prior. Now, we did get a close as of last week's candle above 109. We got a close at 109.217, breaking that candle's wick high. So the same candle that set the closing high, which is now a complex high up here, did also set a higher low. And that's what we've been looking for quite some time. So this is very, very, very important. We have a higher high to higher low and a close. This is our trend reversal setup. So what does that mean? That means, so for the high up here, we got the close above it. We have a closing higher low. Same candle that closed the actual high here was the criteria for setting the higher low and a close. And we have very clear invalidation of a trend reversal setup. So when I say a trend reversal setup, that is the higher low after a downtrend breaking high is put in. So this is it. This is it right here. This is our trend reversal setup. I alluded to this potentially occurring, since in the last 2 weeks, essentially since we saw the red candle come in, and that bearish candle with the swing low at 98.225 here on spot is going to be a very important one. We had the nice bounce and recovery above the 101 level for the closes. The weeklies came in right at that 101, essentially 100,996. That's good enough. Within the margin of error, we ended up getting that, and now we have the trend reversal setup. So how does this get invalidated, and how does it get confirmed? Well, invalidation is closes below 98,225. We do now have the basis band right around 96,228, right at the point of control for the most volume traded price here in this range. Very important. That'd be the next area to look at if Bitcoin began to close anywhere below that 98,225. Now, of course, on the daily, I have that range at about 95 to 98. Anywhere below there, we look 93.5 to $93,000, which is essentially this last closing higher low. But this is realistically going to be the play is right here, right now for the bulls. So they have a bit of a zone. You can call it basically 98 to 101 to the bottom side. And what do they need to do? They need to stay above the upper first standard deviation now, right around the 107 region, 107.2 in this case, and on a close for the weekly, and start to push the top side and get the trend reversal confirmation. So we have the trend reversal set up on a close. Trend reversal confirmation be closes above 112. And in this case, it's very close. It's very tight up here, which can be interpreted bearishly by some, but you got to give it a chance. You got to let it play out and see what it actually looks like over the course of at least this week. We'll see where things head. I think we might get some really pertinent information as to continuation here this week. We'll find out very shortly, right? But in this case, we've got basically a zone of interest, 109 to 112, $3,000 range at the highs, Close above 112, that would be a trend reversal confirmation close. And we're either already running on the daily, the 112 to 115, or will likely do that very soon after. And that's also open. That would also open up about the 118 to 120 by the upper second standard deviation. And then, of course, we would have the 128 to 130 above there if we start to see closes and a breakout on the daily that leads into the weekly. Start looking at that upper third standard deviation. 128 to 130 has been the number that I've called out for the macro fib extension for the prior cycle high to bear market low, but it's also a local fib extension for the big monthly correction down that is also a higher low. Now measuring it here on the weekly, just so that we could see how things line up. 1414, $128,000. I've been saying 128 to 130 for a very long time. It's confluent locally if it does occur, and then there's also how that syncs up with, or has confluence with, the prior macro fib extension from the prior high to the bear market low. We can see that $128,000 right there at also a 41.4% or 1414. So $69,000 plus 41.4% gives us 128. And that would be also, major macro Fibonacci level of interest on extensions. And it's right around our 128 to 130 that I've been talking about for the weekly. So I will say that I'd like to see the bulls, kind of shit or get off the pot here this week. We'll see if traditional markets, which could be heading in for a correction on the daily, might throw some salt on the bulls' wounds for trying to get into the overhead resistance here, and getting rejected here on the daily, and maybe turn it into a weekly rejection. And how would we see a high painted? Well, we would have a higher high and a close, but lower high and a swing if it did close anywhere below. Of course, if it didn't swing any higher than 112, obviously. But if we did see any closes below 105, 120, which again is right there. That's the next. It's the move down below the 106 level, where Bitcoin closed on its daily 20 simple and then pushed up to actually start to, get that close above the 109 level. So last week's low would be where Bitcoin would paint a high. And I'll tell you that if we did get a higher high painted and get this kind of a read on RSI, there's your regular bearish divergence. First one would likely lead to a correction. Could it lead to a potential blunting of the trend reversal setup on the weekly? Well, that's what we would have to consider at that point. As it stands right now, got to give it a chance. It is early in the week, and just watch it through Sunday. And we'll keep an eye on this, of course, and check in on Wednesday, see where things are at. I hope that you all had a wonderful holiday weekend and a great 4th of July if you live here in the United States. And I hope you have a wonderful week ahead. You can catch me on various shows during the day. Those are Spaces events for those shows. And you might hear from me on some of the shows in the evening, some of the live streams in the evening here this week. We'll see how that goes. But other than that, if you're looking for TA, you can find me here again on Wednesday for the Wednesday check-in. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.